What's up, guys? Welcome back to another episode. And what an afternoon I have been having. Tomorrow is my wife's birthday. And as part of trying to take care of her and surprise her on her birthday and all that, I have gone and booked a vacation, very short weekend stay in Rome. So we're going to go and see Rome. We're going to walk around the Colosseum, the Pantheon, like all of the sites, the Vatican. And we're bringing the kids along as well. And it's a big surprise. I'm whispering because they're all downstairs asleep in bed. And it's late. And as I'm preparing for the check-in for the flights this afternoon, I open up my daughter's passport only to find that her passport expired a couple of days ago. And so panic stations have to be in the airport for a 9 a.m. flight, which means being in the airport for like at 7 a.m. or 6:30. And so it's a total disaster. And what I've done this evening, rushed to get photographs taken, then rushed to the police station to get witnesses signing application forms. And I've gone and I've booked the first slot I could find in tomorrow morning at the passport office. And so I'm going to have to abandon the flight, but at least possibly have a passport issued within a few hours and hopefully catch a later flight and resurrect the vacation in some shape or form. So guys, you can imagine it's a little bit stressful right now. And so apologies. But what I want to do is I want to introduce my guest this week. My guest this week is Sam Lowni. Now, Sam and I are going to discuss his extensive journey in the real estate and finance sectors. Interesting to know that Sam spent quite a bit of time in Hong Kong, and Sam works on the whole investment, strategic investment, understanding market dynamics, based in the UK now. He looks at the housing market, and he founded a brokerage called Mary Oaks a couple of years ago. And so he's going to go into everything that there is to know about the property scene in the UK and how are we going to solve the UK housing crisis. We have a pretty extensive one here in the Irish market, and so we're going to be looking at the UK market. And so, guys, without further ado, my conversation with Sam Lowni. Sam Lowni, welcome to the podcast.
Thank you for having me, Gavin.
It's good to have you here after a couple of technical glitches on both sides. What I wanted to do, Sam, is let's first of all let's start off. Where are you calling in from, and tell us a little bit about yourself.
So I'm actually on the south coast in South Sea Portsmouth, where I moved a couple of years ago. Over the last 20 something years, I've lived mostly in London and 5 years in Hong Kong as well. So I lived in busy cities in the hustle and bustle. And since COVID, since having a 3-year-old daughter now, I decided to move to the south coast where the in-laws are to have some help with childcare as I look to grow the businesses that I'm working on.
Yeah, I can relate to the whole childcare thing. I got 5 kids. In
Wow.
the case of Hong Kong, that's interesting that you have this background in that involves Hong Kong. Tell us a little bit about like why did you end up in Hong Kong first of all?
It was all to do with the global economic crisis in 2008. I was doing really well as an estate agent. I was buying properties, selling properties, building a portfolio. I was doing viewings on a Saturday. I was painting and decorating on evenings. I was studying as well. Meanwhile, all of my friends were going to Thailand and Brazil and Australia and India using their student loan money. And when 2008 came round, the party had stopped, the music had stopped, and I just fell into a little bit of a lull in terms of where my future lay, and how I wasted my youth on trying to build wealth when it was going to be World War III and everything was going to get bombed, and it was going to get worse before it gets better. So I decided actually just to take a little bit of a break and take a year out. A year out was to go back to Iran, where I was born, where my parents are from, and spent 3 months there, then 3 months in Hong Kong. My brother had moved there 6 months prior to me going there. And then I had a ticket to go to the Amazon rainforest in Brazil. Then I was going to spend 3 months in the States and then come back and reassess my whole life and see, I just wanted to spend a little bit of time of finding a little bit more about myself and life. And I believe that the words of Gordon Brown that the days of boom and bust were over. and turned out not to be the case. So I needed to do a little bit of soul searching. Anyway, landed in Hong Kong, and the 3 months ended up becoming 5 years. I ended up building food, beverage, hospitality businesses out there, and running them for wealthy aristocracy in Hong Kong. All the meanwhile, we had the properties back in the UK, so all the foundations that were built in 2008 that I thought was going to get bombed and go to zero, and it was all going to be a crisis, and we were going to get repossessed by banks. Fortunately, interest rates collapsed, rents went through the roof, and we were able to use the profit at the end of each month to pay down our loans. That was the strategy that we used. And I say we, I've always wanted to be in property since a young age. My mum and dad were buying properties up in the northeast of England where I grew up. They were buying them for £2,000-3,000, selling them for £5,000-6,000 when the average house price in the 80s was £80,000. So I'd always had this around me. And when I did my first deal in 2002, my old man and brought some funds down, and we started just doing it together. There was before Rightmove, before Zoopla. You really had to know the kind of the values and the branch managers on the high street to be able to find the deals, and I had access to that. So that went well. But yeah, in 2008, the music had stopped. Property prices started going down. Those loans that we were getting weren't available anymore, and I just thought, I want to go and enjoy myself. And because I've always got my business hat on, I ended up doing a bar job that got a little bit out of hand, and I started running and setting up venues from scratch from Hong Kong to Vietnam.
And what age were you about when this happened?
27, I moved out to
Hong Kong.
Hong Kong. But,
Okay,
yeah.
it's a good age to go and spend a bit of time, finding yourself, and it lets you kind of get that. It's funny because my dad died at 21, and when he died, I got involved in the business and all sorts of stuff. And I remember looking back and thinking I never did any of that, finding myself traveling, doing the year in Australia that a lot of young people do. And I kind of regretted it. And I thought I got thrown in at such an early age that I never had that exploration. So I think it's probably a good idea to get out there and do that kind of thing.
I think it's helped me massively. I think in some ways it set me back a little bit, but I think it's also helped me massively. And it just, are you a half glass half full type person, or not? And in some ways, if I'd stayed in the market in 2008, 2009, 2010, I went and found the money, even though it wasn't coming from the conventional places, I would have probably been able to continue building my portfolio. And if I just had more knowledge at the time, more confidence, but I didn't. At the same time, I went out to build businesses in a different industry, in a different place, and that actually was very much character building at the same time. So, and now because of those days, because of my, these were bars and restaurants and nightclubs, I had a lot of fun. Probably too much fun as well in some instances. It's a semi-tropical island with boat parties and all sorts. I feel like I've truly got it out of my system now. So I am absolutely 100% focused on family and business and fulfilling my potential now. Whereas I don't have that regret. I don't have that lingering over me at all anymore.
Yeah, yeah. There's a lot of people will relate to that kind of sentiment. So Sam, tell us that you came back from Hong Kong around what, 33 years of age or something like that,
32
32,
exactly,
33.
yeah.
And what did you get started into then?
So yeah, 2015 arrived back, and I was looking to get back into the same thing that I thought would still be there. I knew that the property prices had gone up significantly. We were buying some of these properties in around North and East London for £100,000. Some of them were worth 500,000-600,000. So I just thought, well, let's keep doing the same thing. But of course, paradigms shift, the market shifts, rules change, and we needed to find a different way of doing things. So we were on the millionth episode of Homes Under the Hammer, I think. Auctions were really, really busy places compared to what they were in the past. And the fact was that the money that I was raising was from an existing portfolio, and I was raising it as debt. And we didn't want to sell the properties because we'd have huge capital gains to pay. So I decided the best thing to do was refinance, and because of that, I couldn't afford to lose the money. So going down the route of flips, for example, buying and selling property, trading, if there was ever a loss that I had to crystallize, I'd lose that money, and I needed to find it back again to be able to pay the principal. So I just thought that buying and holding, which is what had actually made us the most money over that period, it's coming up to kind of 15 years or so, would be the best way to do it. But then also, with interest rates being rock bottom for so many years, they could only go in one direction. Yeah. So I had to look at getting the highest yield to be able to cushion any blow as and when it happened, not knowing when it would happen. Funnily enough, it has happened over the recent years, and I have been able to weather that storm. So yeah, it was HMOs were the thing. That was the conclusion, and I wanted to be in the top end of the market. So I would always do a 1-to-1 ratio. So always 1 bedroom, 1 bathroom. So these were 5 bed, 5 bath, 6 bed, 6 bath. I created 9 self-contained studios up in the northeast. I think smallest one's a 4 bed, 4 bath. That was a combination of 2 flats, and it was this classic buy a rec, refurbish it, optimize the layout, put in the en suites, etc. in university towns predominantly, or where there was a university campus and some sort of employment, and then just buy and hold it. And hopefully the value add when you refinance at the end, you pull out a bunch of cash, it increases your return on capital employed, and then you get to go again. And so we did that, and it worked out well. It's worked out quite well. We get a good residual income every single month from these. There is extra management, which is a bit annoying compared to your average buy to let, which those ones still tick over beautifully. But the utility bills and the maintenance from an HMO is, I have a property manager that I have to have now just to manage those properties. And it takes up a couple of hours a week, I would say. Compared to, I mean, the single lets are just still dreamy stuff. And some of
But
the
you don't get the
HMOs,
yield. Yeah.
pardon?
But you don't get the yield.
But you don't get the yield. And this is, at the end of the day, it's always risk, reward, and effort. They're
Yeah.
very, very much low risk, reasonable reward, and very low effort. So, being the age that I was when I started doing this, I didn't have a wife or girlfriend, didn't have any kids, and I was starting to travel the country as well. So I literally, to find those initial deals that I did over 550 deal appraisals. I'd gone to Blackpool, I'd gone to Bolton, and I'd gone to Newport in South Wales. I'd gone to the Northeast, Newcastle, Sunderland, Middlesbrough, and everywhere in between, just looking for these deals and running deal appraisals. And that's how I found my first few, in Medway in Kent and in Coventry in the West Midlands.
So 550, this is an interesting thing for me because I talk to my own clients that I coach and stuff, and we talk about the fact that you got to look at so many deals just to find the one. It's like the needle in the haystack these days.
Absolutely.
So you did 550 appraisals. How many deals came out of that?
Five.
Wow. So about 1 to 100.
Literally, yeah, exactly. So, yeah, and all in different areas. Obviously, if you're just focused on one area, so if you're focused on one postcode or two postcodes, it's difficult to find that level of opportunities. I was able to go nationwide and just look absolutely everywhere, and I was looking for something very specific, which was the HMO, at least 5 bedrooms, because four wouldn't give you enough margin. I had to have 5 bedrooms, not too big as well, where I had to go through lots of planning and stuff. I was kind of just wanted to stay in that within that PD. Um,
That's
4 to 6
that's permitted
bedrooms.
development, isn't it? Yeah.
Exactly. And there no Article 4 in the area,
Just
and I
for the
need,
for the
sorry.
people that don't understand, because we do have some audience from outside of the UK and stuff. Article 4, what is that?
So, mm, since I think 2013, we've had permitted development rights in the UK, and those permitted development rights allow you to do certain types of development as long as you tick a few boxes. And what happens when those rules come out, the local councils have an ability to remove those rights through an Article 4 direction.
Right.
So that they'll get together and decide, actually, we don't want these commercial conversions, these offices turn into residential. We don't want these HMOs in this area so easily, at least. We want you to go through a full application. So usually about 18-24 month window, and those rights could be removed. And across the country, for HMOs in most busy places, that has now happened. So it's very, very hard to get PD on HMOs, I've found. So, that's what I was looking for at the time. And, I grew up in Durham City. So first and foremost, I was thinking, right, I'm going to go to Durham City, my hometown. I've got loads of friends. I know the area really well. I'm going to buy loads of HMOs. But it was already Article 4. So to get planning approval for those types of properties was very, very difficult, very challenging. So I started to find spots that didn't have that, and I could get that PD in place. And then the houses needed to be big enough so that I could get the 1-to-1 ratio as well. I didn't want to have 5 bedrooms with 2 or 3 bathrooms, because I would
Gotcha.
always, to myself, think that would be substandard at some point when there was an oversupply. And I wanted to make sure that my properties were always designed really well and had the facilities to keep them in the top 20% of rental stock in the area.
It makes a lot of sense. That, yeah. So Sam, you did this for a couple of years. You built up a bit of a portfolio. Um, then you got into the lending game.
Yes. So whilst I was doing these deal appraisals, I would be literally up till midnight, just going through, scrolling through Rightmove, looking at floor plans, optimizing them with a pencil, printing them out. That took up so much time, especially when the first ones I started to buy them. Once you're in the build phase, I'm really not that good on site. I'm very good in the office, like an estate agent, finance broker, etc. So once it was up and running, I know how to manage a project. I know how to run a Gantt chart and do the valuations on a Friday, and I'd go to site and do these things. So through the week, with my capital being deployed, I had a little bit of spare time, and I was looking for other things to do. And I was actually thinking at the time that I would grow my development business. So whilst I'm doing these small things, which is what I always used to do pre 2010, so I felt comfortable with that, I thought, let me do larger scale developments. But to do that, I needed to joint venture. I needed to buddy up with somebody that has that level of experience, either a contractor or a developer that's done that. I could be the youth on the ground with the energy and go and find the opportunities. They could bring the level of experience required to provide the credibility so we could scale. And in doing so, I went networking, a lot of networking events, and I've met a chap called Paul Oberschneider, and he built a very large fully integrated real estate business in Central and Eastern Europe, which involved estate agencies and a development company. And I said, perfect. I think you would be a great partner for me. And we just basically hit it off and we got on. But he said, I've got a slightly different idea to doing development. I don't have the time on my side that like I did when I started in '92. I want to do the development loans, because that way I don't need to wrestle with landowners that are very localized, with planning that can take forever. I just want to find oven ready sites where people require the capital, and from living in London, between Oxford and London, I can put the capital out. Having reviewed the idea and the fact that it was so scalable so quickly relatively to doing development, I thought actually it's a really, really good idea. So for a good 12 months running around the streets of Mayfair putting the capital together, obviously Paul was massively instrumental in getting all that together. We did it, and it was they picked the name. It was a joint venture with Roundhill Capital, which is a private equity real estate firm, and off we went.
Roundhill Capital. I did something with them before, yeah. And tell me this: when you say that you started lending, so you were a broker, a finance broker, as opposed to actually it being Paul's capital that he was investing. Is that the case?
No, so we once we did the joint venture, we had some seed funding, so we formed the company, and I head up the origination. That was the title that I was given.
Right.
Whilst Jacob was doing the analysis, and Tiger was kind of in between. It was the four of us effectively, and I would I would find the relationships with the developers. I would ask them to send over their deals, and between myself and Jacob, we would run through the deal and see if it was worthy of funding. And I was like the first line of defense, put it that way. So anything that was not really good, I'd have to throw it out. Anything that I thought stood a chance, I'd have to package it up, share it with Jacob, and then we would be responsible for asking all the questions to make sure that we could get it ready for a credit review for our funding partners, which were challenger banks, loan on loan facilities, etc.
Got it. And when I mean, it's funny. I often talk about being lender ready, in terms of, somebody looking at your numbers and your finances and stuff like that. When you were doing that, developers that are looking to borrow 10 million, like, they don't always have the sophistication that you might expect them to. Tell us a little bit about how that kind of turned into something bigger for you.
Yeah, it was actually very interesting. So when you're a lender, and especially you're starting out, you've probably made agreements with funding lines where they're committing capital to you, and they need to deploy that capital. So sometimes there can be a little bit of urgency to get that capital out. So if somebody's coming and asking you for, let's say, 5 or 10 million pounds, which is to a lot of SME developers a significant amount of capital, they may not have the sophistication to be able to speak to those wholesale type capital lines of funding. So what we have to do is we have to take that information and then package it in a certain way, present it in a certain way, use certain types of language in a certain way that lands well with those people to give them the confidence. Now, we started to create a few rules, and which well known in the industry, that you can't take giant leaps. So if somebody's been doing like what I was doing personally, where I'm doing £500,000 GDV projects, 5, 6 bed HMOs, etc., then to try and take on a £10 million project, it's probably going to be too much of a leap of faith. So the idea is to start small, think big, but also take incremental steps towards reaching that. So if you were doing lots of £500,000, call it 5, 10 in the last 5, 10 years, £500,000 projects, then doing a leap of faith to, let's say, 1.5, 2 million is not that much of a bigger ask. You obviously know how to deliver projects. You also obviously know laws around planning and building control, etc. So you could probably navigate that. So that's the first thing, taking incremental steps. The second is to make sure that you've actually got, most importantly, the team around you is obviously important. You can't use a contractor that hasn't got the relevant experience, or architects, etc. They've got to have the PI in place. That's all well and good, and that can be employed. But also another point that they always look at is the balance sheet, to make sure that if there is a cost overrun, if there is a time where the project requires a cash injection, the developer themselves can put their hand in their pocket and cover that cost overrun. They're not running back to the bank or the lender or the funder every single time that happens. And on a few occasions, we literally had some wealthy people, by the measure of most people. They were like worth £5, 6 million net worth, which is a good amount of money for many people. But they were literally trying to take on an 80, £100 million project. So when we looked at that, it's like, well, unfortunately, you're just not quite there yet. So even the wealthy people, depending on your perspective, they need to go down the same process to be able to do a measure a commensurate sized project.
Yeah, yeah, it makes an awful lot of sense. And so you started your own business eventually, and
Yes.
it was because of you spotting that gap in the market where being able to kind of help the guys that are not sophisticated enough to get it past somebody that is like a sophisticated lender.
Exactly that. Exactly that. Because I'd been a borrower for a lot of this stuff, for term loan lending, for bridging lending. I'd used private debt as well. So I'd gone down the route of raising from private investors. I'd done all of that. And then also on the more institutional side, everything that I was doing at £1 million plus, I'd literally taken things through credit. I decided that I would be well placed to package deals for investors and developers and help them scale. So if you were doing £1 million projects, I could help you get to 5. If you're doing £5 million projects, I can help you get to 10. If you're doing £10 million projects, I'll help you get to 20. And I just knew all the lingo, knew the language. I was very, very passionate about what I was doing. And I was good at originating deals, building relationships with developers and originating the deals. So I just thought, and I could see that some of these brokers were doing really, really well, to be fair. And there was a handful that really, really stood out that I thought, actually, you know what, if you were more like that, um, then you do what I thought was also a bit more exciting for me in the long term, which was building the relationships with the developers. As a lender, your job is actually to build the relationships with brokers, because they are the outsourced, originators for your deals. So rather than going out spending lots of time with brokers, which I didn't see as fruitful or as fun, I decided, okay, if I'm a broker, I'll be able to spend more time with developers. And actually, those are the conversations that having been a developer myself for most of the previous 20 years, albeit on the smaller stuff, those are the more exciting conversations that I wanted to be part of.
And so how did that, you created Merry Oaks. And so tell us about starting a business in this space. Like you were saying to me before, I think before we started recording, that there's a state agency and then there's brokerage, finance brokerage, and it's much more scalable. Tell us, some of your thoughts on why you started that business.
Yeah, so I mean, one of my partners in some of the HMOs that I own is the branch manager of one of the estate agents I worked at in the mid 2000s. Still have a fantastic relationship with him. He's a great guy. I told him what I was going to do, and he was like, "Well, look, I've got some cash that I can put in as well. Let's go and do it together." And I always used to speak to him about, let's start an estate agency. Let's go, let's do it for ourselves. You were the branch manager, I was the negotiator. Now let's do it for ourselves. We're of age. And every time I run the business model, um, I just thought there's a lot of cash to put to put into this. And this was a time as well where online agents were doing quite well. Purple Bricks was kind of rising high, and I just wasn't 100% convinced that estate agency was the right way to go. Even though I had a lot of experience in it. I was very good at doing it. I was super passionate. I always wanted to do it growing up. So it was always the number one thing. But every time I run the numbers, the risk of how much cash it needed to do it really, really well, I just thought maybe there's something else out there. And this whole being in the finance space, being a lender, was screaming at me in the face. It actually came about whereby I was reviewing so many of these deals, and I could see that because of the funding that Hilltop had, we wouldn't always win the deals. So either our funding was too expensive, the leverage was not high enough or too low, or we don't do hotels or something. But these were good deals with good sponsors, and I knew that they would get funded somewhere else. And then the broker would go off and get that business. So I presented all of the deals that didn't happen and the reasons why, so that we could start to solve for that problem. And it was in a conversation with Paul where I said, look, we're leaving a lot of money on the table here. Maybe there's something we can do about it. That was like a throwaway comment. But months later, sat down in a morning meeting and he said, we should start a brokerage and you should write the business plan and do it. So I was actually quite happy with that because I was thinking this is something that I could really get behind. And so that Christmas, I wrote the business plan. Come January, I showed it to Paul. He absolutely loved it. It was just the fact that everybody else in the business wasn't as keen. Like, we were running a credit business and we don't want to have to get involved in brokering and all this other stuff. Like, we will do one job and we'll do it well, but don't give us like loads of business ideas to run, because we just don't have enough time in the day. And we were getting busier and busier as a lender. We were starting to really get some momentum. And because of that, and because I had the kid, I just thought, I think I'm going to do this business plan myself and run with it. So I spoke to Paul about it, and yeah, with his blessing, he said, yeah, go for it, and I'm sure you'll do really well out of it. And
So do
the
you
rest
work
is
with
history.
Paul like you go to him for deals
Yeah,
occasionally?
yeah. I send him deals. It's been a hard market. I mean, they specialize in development funding, and it's been a very, very hard market. So yeah, I still have a fantastic relationship with Paul. Spoke to him a few weeks ago, and but the market for development finance has been really, really tough. So we I just looked at my last week at how many development loans that we've got on our books at the moment, and it's only three.
Wow.
That's the in terms of applications, compared to when I started, when it would have been probably about half of the entire pipeline. So it's very, very low on the ground. Over the last 18 months, we've been doing a lot of commercial term loans, a lot of buy-to-let style stuff, to keep the money coming in. And in terms of development, it's been a lot of development exit, where developers, they would have loved to have been on their next project by now, having their units sold, etc., or their property refinanced. They've just been stuck. And so development exit has been paying our wages, whilst developers have been trying to get the next development underway, but it's just been stuck in the mud, really.
And so what does the future of the UK market look like for you from your perspective?
So when we started Hilltop, and since I can remember, we've had a chronic housing supply shortage. Um, so one of the missions for Merry Oaks is to help solve that problem. And back in 2008, the biggest problem was funding. That problem has, to a certain extent, solved itself, where there's lots of capital still, lots of liquidity. It's just the way that it's intermediated has changed, because whereby you had a couple of handfuls of banks and building societies pre 2008, now you've got over 200 funders that we can approach
Wow.
for bridging, development, commercial, buy to let, HMOs, all that sort of stuff. And these are high street banks, challenger banks, private debt, private equity, high net worth, family offices, and everything in between. So that then creates an opportunity, at least for finance brokerages. Um, the plan, I think the biggest reason why we're struggling to build enough homes now is to do with the planning system. I think that it's flawed. I don't have loads of solutions for it. I think it's a very, very complex problem. I think the fact that we've had 13 different housing ministers through the Tory government in 13 years didn't help. But I think that that's the reason why we've had a big hold-up. Things like permitted development have helped, but it's also, in some instances, I would go so far as to argue it's created substandard housing. Um, but again, it doesn't even get near to solving the grander problem. So, where do I see it going in the future? I think that due to the supply demand imbalance in the UK, I think that there's still huge money and huge opportunity for investors and developers. But I think to get into the investment and development side of things, to have an edge, ideally you need to have a skill set of some sort of being a planning consultant, a contractor, or an architect, or have somebody within the team that has that skill set, because then you can build or add value in a way that other people, novices, people that
Don't
are just
see it.
joining the
Yeah.
game late, yeah, exactly. So, and landlords have been taking such a bashing over that since 2015, ever since George Osborne changed the section, put in section 24, abolishment of wear and tear allowance, and the rest of it. I just think that it is difficult, it is a challenge, but at the same time, I take a 20-year view with property and investment. Right now it's challenging and there's been a squeeze. But I think if you take that 20-year view, that eventually there'll be that deregulation. They'll realize that the public sector cannot create all the affordable housing that it requires. And suddenly they'll open up again to the private market. And there will be the gold rush again. But we might be talking about 2-3 years away from that, or 2030.
Yeah,
I'm hoping not later than that.
it's like it's funny because it's quite similar to the Irish market, and we have this chronic. I mean, it's absolutely acute housing shortage, and we don't have the capacity, first of all, but we also have the same planning issues that you're referring to. But when you talk about deregulation in order to kind of open it up, it's such a political kind of hot
Yeah.
potato that you wonder in the UK, like, would that happen under a Labour government, or is it more likely to be in another government comes in 4 years' time?
Exactly.
Yeah, difficult.
And it's hard to say. That's what I'm saying. So it could be as late as 2030. We might have to. The Labour Party have in the UK have committed to 1 million homes in the next 5 years. Now, if they get nowhere near that, then there might be a good case for getting the Tories back in, and it just goes back and forth like that. But let's see how they perform. I think they've made a commitment, and depending on how they perform, they'll will hopefully they'll do it. I just can't see it happening. But and we don't have any concrete policies that really really move the needle, in my opinion. I think that they were saying like we're going to get more planning officers, as if these planning officers are just sitting around waiting for these jobs to come in. The private sector is paying planning consultants a lot more, and what are they going to go and do to be able to attract them, to be able to make those decisions? And then all the NIMBYs, how do you solve that problem? Which I think
Yeah,
is why things slow down as much as they do. So, yeah,
yeah.
it's very, very challenging.
One of the things that I think that would probably happen, although there'd be a lot of resistance to it as well, but artificial intelligence, like a lot of the stuff that happens in a planning department, it's like box ticking exercise. It's just the volume of work is greater than the number of people that are trying to handle it. And if you just have a process where certain rules are easily approved because there's an artificial intelligence there, and then it's only passed up when it breaches a certain kind of type of problem that is best handled by a committee or something like that.
100% agree with that, and I think that even also within lending, decisions can be made a lot faster for underwriters. I think we're going to see a reduction in number of underwriters because AI, and you see all the prop tech tools out there these days. They can do the analysis in lightning speed, and as you say, if it breaks certain parameters, then it will be called upstairs for a review. So yeah, I think that could be helpful. From the It's just that subjectivity, like the NIMBYs, for example. If you have to, something needs to be done about that. And I don't know the solution as well, because I understand that nobody really wants their backyard to change. I get it, but I think at the government level, if we are going to solve it, something needs to happen.
Yeah, that whole idea. I think somewhere, maybe it's the Netherlands or something. They have these rules that if it's for the greater good, then it goes through. And of course, nobody wants to be the one that gets railroaded for that reason. But there is a lot of abuse of the system where somebody who just has his own back garden that doesn't want to be overlooked can, prevent 70 houses from going up or something like that, which is kind of ridiculous, because it's one person and his demand versus 70 people getting a home.
Yeah, and with everything in life, there's always a cost. Whatever decision you make, there'll always be the negative, the downside. And ultimately, somebody with conviction needs to draw the line in the sand and say, this is what it's going to be. And it might become, I just think this whole landlord bashing thing is crazy, because it's also, I think they say it's a vote winner for rent controls. They say it's a vote winner for the Landlords Reform Act and the Tenancy Reform Act. The fact is that if they start bringing all these reforms in, again, what's going to happen, like it did in the 70s, etc., is that you're going to get substandard housing. And all these tenants are going to start complaining, saying, oh, well, we don't have a good quality housing. It's so expensive for what we're getting. And then
Yeah.
landlords will be like, well, of course, we're not going to create the best possible housing because there's no margin in it for us. So why would we even be in that sector? And then you have to go through the deregulation to go back. So it's just like history repeating itself almost. And I think whichever part of the cycle you're in, you just have to be able to still make the numbers work, and be passionate about it and take a long term view. And I think that that's where I'm at with it. It's crossed my mind to sell my portfolio at some point soon just because of the extra stress. But then I do think, okay, I've got faith that in the next 20 years, in the next 10, 15 years, I'll be able to see some capital growth. I'll be able to see some return that's going to be worth my while to hang on to it. But I can understand that all the landlords that are wanting to get out, I just happen to be a property person from a very young age. So this is my pension pot.
Yeah. Well, it's funny you say that, Sam, because here in the Irish market, we have people that are like the landlord bashing is much, much more intense. And we have, because of our housing crisis being so acute, they really have made it nearly impossible for landlords. And so they're exiting the market in their droves. But what has that done? That has actually meant that the number of rental properties available has dropped significantly to the point where rents now are skyrocketing because there's so few to choose from. And I can remember hearing a figure there recently. Somebody did some research, and it was something like there are 5.9 properties available to rent for every 10,000 people in the
Wow.
country. So that gives you an idea just the scale of how bad it is. And so it's no wonder that I think the rents since the end of COVID, rents in the country have gone up 47%. And like that's a huge increase because already it was significantly high.
And so, and the next thing they do when that happens is they bring in the rent controls. And once you bring in rent controls, the landlords don't have the profit to be able to
They-
create really good housing. So they just end up doing the absolute bare minimum, no frills. And so
Yeah.
then that class that you're trying to support actually end up getting having a detrimental quality of life because of it. And so for me, the only answer is to build more homes. That's the actual answer. But these short term fixes, these vote winning policies, are just a little bit short sighted, in my opinion.
Well, but history has proven that that's the way it always is. Because if you look at,
Yeah.
after World War II, a lot of countries brought in rent controls so that the veterans coming back from the war could have cheap housing. And what did that do? That created ghettos and stuff because suddenly there was just no more investment going into those areas because the rents couldn't be increased to support improvements. And so, sure enough, you end up with like entire parts of New York City are kind of ghettoized because of the fact that they introduced these rules back in 1945.
And we don't seem to learn from these mistakes. Like the people that are making these policies are just doing it because they feel like they're going to get the votes and they're going to get into power, and that's their game, and that's all they
Yeah.
really care about. Whether that actually really makes people's lives better in the very long run, it's a little bit of a byproduct in the hope that it does. But they
Mm.
probably know fine well it doesn't. But as long as they get into power and they get to go home and show their trophy from that kind of short-sighted win, that's all that matters. So it's a systemic problem that we keep on seeming to be going through the same cycle. But yeah, I think from an investor's point of view and developers' point of view, we just have to pull ourselves out and make informed decisions about whether we want to be investing in opportunity cost. Is it going to be in crypto? Is it going to be stocks, shares? Is it going to be the
Yeah.
FTSE? Is it going to be property or other?
Yeah, no, it's funny. Like when you talk about the political, the all the sort of quick decisions that are made just to win votes and stuff. It gets me thinking about. I was just in Dubai last week, and I was speaking with an estate agent that I went to school with, and he's living there for the last 10 years. But in the process of talking about it, we were sort of saying, democracy nowadays is really the problem when it comes to rapid growth and housing
Yeah.
because you've got so many different competing agendas that's very hard to kind of come to a decision. Whereas in the case of Dubai, the ruler wants the place to have a 6 million population by 2040, and he just decrees that's it, bang. create whatever's necessary. And next, when you have 6-lane highways in both directions extending out into the desert, like, and you're wondering who's ever gonna live there? But they will fill that in the next decade, you know?
So I mean, there's pros and cons to that, obviously, and
Yeah.
like I was saying earlier, there's pros and cons to everything in life. And with these mature economies, they're like blue chip stocks. Whether you call it the US, Western Europe, Australia, etc. And they steady growth. They're not gonna, you're not gonna see them grow overnight. And then the democracy, as Winston Churchill said, it's the worst of systems apart from all others. Um, and of course, the population of the world has gone from 3 to 6, 7 billion in 50, 60 years. So there's a lot more stakeholders in every democratic vote that's made, and so many more different opinions as well in between.
Yeah.
So the only issue that I've got with dictatorships is when the benevolent dictator passes away and then passes it to whoever it might be. Usually it's a son,
The
not
malevolent
necessarily
son.
the most. Yeah, exactly. And you hope that that's the case. And I just know that there are historical dictatorships whereby that isn't the case. And suddenly, all of that wonderment, all that greatness is actually turned on its head, and it turns into a living nightmare. So, in my person, and I get why people go to these places and do these things. And I've been to Dubai twice in the last 2 years, and my wife's talking about going out there before Christmas as well. It's a fantastic place. I just personally, would I put all of my eggs in that basket, or even can I spend my time there or build my life there when I know that that could happen? I don't feel 100% comfortable. So for all the pros and cons that the UK has, where we might be a bit slower, everything might be a little bit older, I'm willing to put my effort and energy into trying making this the best place it possibly could be.
That's a great way to finish our podcast, Sam. Tell us a little bit, how can people find you if they want to reach out?
Yeah, either LinkedIn, Instagram, all the social media channels, or just email me directly at sam@merryoaks.com.
marryoaks.com. Okay, well, I'll put a link down in the show notes, and we'll make sure some people are directed your way. Sam, thanks so
Thank
much
you very
for coming on today, and sorry about the technical glitches at the beginning.
Not at all. Thank you very much for spending the time with me.